Hi guys, so is a lower rate is always the better option for you guys? So apparently not in every case. So we had a client coming to Netherland Capital Group. He have 5 properties that he like to do a refinance for. He needed to take all of this money abroad and he needed as much money as possible. Now the thing is, we did the auction for him, and between more than 200 lenders, we found more than 10 lenders, the best ones that can give him a refinance, but only 2 of those agreed to do all of the 5 properties. And why? Because 2 of them, the value was less than $100,000, very low value, and they didn't agree to do them because of the risk. So we can see on the right side here, one lender that agreed to do only 3 properties and gave a rate of 6.85, a great rate for a foreign national. This is a foreign national, right? And he could get it all the way down to 6.58 with 1 point. This rate is with no point. And on the left side, we can see another lender that agreed to do all of the properties and with higher rate, 8.38. Okay, so initially many borrowers would say, yeah, I want to have the lowest rate. The only thing is, if he would do only the 3 properties with this option, he will be stuck for a long time with the other 2 properties because no lender agreed to do them by themselves, only as a blanket loan. Okay, many people call it a portfolio. It's not exactly a portfolio, it's a blanket loan to do for all of these properties. Okay, so basically we are going with the investor on all of the offers, and we are choosing the best lenders based on the investor, the borrower business plan. Some of them want to have the highest LTV. They want to get the most money out or the most properties included in the blanket loan. Someone else would like to have the best rate, of course. Someone else would like to have the lowest fees or the shortest prepayment penalty. So there are many options for investors to choose from, and basically we are helping the investor to find the best solution that fits them. And in that case, that investor chose to have all of the properties out because he knows that he will be stuck with the 2 last properties. And basically the difference in the amount we can see, it's $75,000. So he's taking this money abroad, and we calculate the difference, $75,000. He wouldn't be able to get such a loan in another country or in the US without properties to back it up, and he needs the money. So the difference with the rate, it still made sense because his DSCR is very high, is more than 2. So he still have from $7,000 that all of these properties bring in, he still have half of it, $3,500 in cash flow if we're taking the net operating income and we divide it with the PITIA. The PITIA is the Principal Interest Taxes Insurance and Association. All right. Now, the left lender also gave a great opportunity to buy down the rate with 1 point to get it all the way down to 7.875 with only 1 point. Usually lenders will allow buying down the rate by every 1 point, every 1%, going to buy down by 0.25%. This lender agreed to buy down by 0.505% to get it way lower. So the distance between the rates is not that high. And still, we looked at the cash flow and we saw that still the left option is better for that investors. Most investors would have chosen the left option because the left option, we calculated the bonus, the benefit that this lender gave compared to the other one. We basically saw the difference between the rate, 8.38 and 6.85. Was, if I remember, 1.11. Then we divided it by 0.25 to see how many points that lender basically is giving as a present, because both of them have the same fees. Okay, they didn't charge more. So it's a huge benefit. It was more than $16,000 with 4.4 points of benefit that the right lender gave. But still, the left option was better for the client, even with a rate that gonna be 1% more after buying it by 1%, 7.875, 6.85. It's still a better option because the client needs as much money in his hand, 75,000 more, and it makes sense for him to pay a bit more every month and get a better option. And we calculate if it's going to make sense for him to buy down the rate. And basically part of the discussion that we're doing with any investor after we're doing the auction, we go over all of the options, and basically what we saw is that it's going to take him only 2.4 years to return that buy down. Okay, the buy down was 3,700, 1 point of the size of the loan, 370,000, 3,700. So the monthly saving was about $130, and overall the saving with buying down the trade was $47,000 for the life of the loan. Okay, so it was a no-brainer. Usually breaking even with buying down the rates takes between 4 to 5 years. Here it was only 2.4 years, so it definitely makes sense. So if you guys want to hear more, contact us at Nadlan Capital Group. And here you can see exactly the numbers. Okay, you can see the PITIA, the principal, interest, taxes, insurance. We are calculating that for every client that come to us and do an auction, they're getting all of this data about their loan. Okay, basically how much going to be their monthly payment with the expenses, how many years going to be to break down for. You can see we chose one point. Okay, the cost of the 1 point, you can see here, 3,702. The monthly saving, 130.991. The overall saving for 30 years, 47,127. Reserves that you need in the account just to show for the lender. You can see the principal and interest, the new rate, and how much each point allows him to buy down. All right, so all of this data we are giving for every investor that is going through an auction with us. In the auction, we go through more than 200 lenders. We are, our team, we are 14 people currently in the company. We keep on growing. So we basically have currently 204 lenders in the database. Our goal is to bring 5 more lenders every week. They're getting into our database. We're closing very good deals with every lender for you guys. So we are basically in our premium program, we're doing 2 auctions for each loan. First of all, we are getting from more than 200 lenders, the top 10. We go on this discovery call. We normalize all of the data. We go with all of this data. We find the best, the top 3 lenders for the business plan of the investor, as I explained. And then we are doing another auction, this time an open auction. We open up these offers to the top 3 lenders. We're also using any external offer that the client have to compete. And till now, we didn't have any loan that we couldn't bring better rate than what the borrowers can get outside. So again, if you want to hear more, go to Nadlan, Nadlan, capitalgroup.com. We'll be happy to help you. And remember, come to Nadlan, it's going to be just fine.